Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, September 2nd. Stocks on Wall Street opened with steep losses following an extremely disappointing employment report. It showed that no new jobs were created in August, the labor market's worst monthly performance in almost a year. Economists had been expecting job growth of at least 50,000, although estimates varied widely. The weak reading was partially due to the strike at Verizon Communications, which cut 45,000 jobs from payrolls in August. Meanwhile, the unemployment rate held steady at 9.1% as expected. The grim report is further evidence that the economic recovery is sputtering, and it could serve as a catalyst for more monetary easing by the Federal Reserve. Fed Chairman Ben Bernanke has said the central bank will meet for 2 days later this month to explore whether further measures are needed to jumpstart the economy.
Not surprisingly, we're seeing some strong reaction to the report in the asset markets. Stocks, of course, are the most visibly affected. They're taking a tumble not just in the U.S., but in Europe as well. Investors are also selling out of other investments perceived as relatively risky, including most commodities. Crude oil is dropping $3 to around $86 a barrel. But on the other side of that coin, assets perceived as relatively safe are getting a big boost. And the ultimate safe haven investment is gold. It's jumping by about $50 to around $1,880 an ounce, once again closing in on an all-time high. In addition, U.S. Treasuries are retaining their safe haven appeal despite the struggling economy. Prices are rising, and the yield on the benchmark 10-year note is dropping back below 2.1%. The 2-year note is now yielding less than 0.2%.
Among the broad declines in the global stock market, financial shares are the biggest losers. Not only are they among the most economically sensitive companies, but now some of the biggest names in the business may be facing a huge federal lawsuit. The New York Times reports that the Federal Housing Finance Agency will file suit against Bank of America, Goldman Sachs, JP Morgan Chase, Deutsche Bank, and several others. They'll be accused of misrepresenting the quality of mortgage securities they put together and sold in the run-up to the bursting of the housing bubble. The suit reportedly says they failed to meet their due diligence duties under securities law and failed to spot evidence that borrowers' incomes were overstated or falsified. Separately, the Federal Reserve asked Bank of America to show what measures it could take if business conditions were to worsen. Shares of the biggest U.S. bank are tumbling 7%, and the rest of the sector is falling sharply as well.
One financial institution suffering heavy losses overseas is Deutsche Bank, dropping more than 4% in Frankfurt trading. But the European markets are also being dragged down by a report in the Wall Street Journal that talks between the Greek government and international lenders have broken down. The holders of Greece's sovereign debt are insisting that it reduce this year's budget deficit to 7.6%. But Greek officials now say they may be unable to meet that goal, with the deficit running at about 8.5%. If the two sides can't come to an agreement, the bondholders may not participate in the debt swap that's required for Greece to receive a €110 billion bailout from the European Union. That's the latest from Weiss Research. The U.S. markets will be closed on Monday for the Labor Day holiday, so we'll be back here on Tuesday. Have a great trading day and a fabulous long weekend.